Hello, ladies and gentlemen. This is Grind School, and you're watching Learning Lessons. Now, as a trader, you cannot be right 100% of the time. It's almost impossible to be right 100% of the time. Every trader loses money, and we are no exception to the rule. We just want to be upfront and honest with you guys. As traders, you are going to lose money. It's just a part of the game. It happens. But what you have to do is cut your losses short. You have to get out when the getting's good, and you have to cut your losses short. Don't get into a trade and then think that it's going to continue in the direction that you chose after a pullback or whatever, because it may not. It may not happen. So you have to get out of the market when the getting's still good, because you don't want to wipe out your entire investment trying to stay in a stock that may not go in the direction that you chose. However, this one is on Altria Group. We actually chose Altria Group because it started to test this 200-day moving average. It would push well below this Bollinger Band and below the 50-day moving average as well. So we believe that that was a strong indicator that it was going to push lower. However, the day before, on August 24th, the stock market actually fell about 1,000 points. 1,000 points in one day, which we've never seen before in the Dow Jones. It happened, and every stock was down significantly for the first 5 minutes, and then they all rallied back up towards their highs of the day. So Altria actually opened and pushed below the 200-day moving average, or it didn't open, but it pushed below the 200-day moving average, and it eventually pushed all the way back up and closed above the 200-day moving average. It opened significantly higher the next day, but it pushed all the way down towards the 200-day moving average, where you see this yellow line on this candle. It made a support level right here. It came down to test this support level, and it didn't push past this support level. We took a risk because we felt like it was going to push down below the 200-day moving average, because it was flirting right at the 200-day moving average, and I think it actually closed a little bit below the 200-day moving average. So we felt that with all these indicators right here, below the 50-day moving average, past this Bollinger Band, and a little bit below the 200-day moving average, we felt like it was going to continue lower. However, it did not do that. It did not do that. The next day, it actually opened higher, pushed all the way down past the 200-day moving average, where we could have gotten out and reaped some profit. We didn't actually reap any profit simply because we allowed it to push all the way back up, and it actually closed higher than it opened the next day. So we didn't reap any profit from Altria, but we decided to go ahead and get out, and luckily we did get out somewhere along this day when it decided to go higher for the next couple of days. Now, this is all on heavy volume, and for the last 3 weeks, the stock market has been very volatile, and it's been extremely hard to make money in the stock market the last 3 weeks, because no one really knows whether the stock is going to go up or go down the next day, and they're not really making legit patterns right now. They're not really making legit patterns right now. We go through our watch list every single day, and it's extremely hard to find something that is almost guaranteed profit in your book. So we've stayed away from the market for the last 3 days, or 3 weeks, I'm sorry. And then we actually decided to take Altria again when it tested the 200-day moving average, because it actually pushed below the 200-day moving average, and then within the next 5 minutes, or the last 5 minutes, it actually pushed back and above the 200-day moving average, and then it made a nice little pullback, and it did it again, and then it's doing it again for the last couple of days, testing this 200-day moving average. Now, with that being said, if you're a directional trader, swing trader, or whatever, which we are, it's difficult, like I said, to make money because the market is so volatile, and it's hard to decipher which way the stock is going. Now, if you're playing spreads, this could be a great opportunity. All of this could be a great opportunity to capitalize, because the market is moving sideways. And when it moves sideways, spread traders capitalize, or they reap the benefits of a sideways movement, because they are trying to capitalize on a range, not necessarily whether the stock goes up or down. So since we are directional traders, we are we are trying to sit on the sidelines as much as possible, simply because we like to reap profits off of things that we can see, not necessarily off of guessing, because when you play a guessing game, it's like gambling and you can lose a lot of money. Now, we did lose money on this day, which was August 25th, and we did lose money on the 1st of September. So after those two losses, we decided to sit on the sidelines and wait it out until the stock market stabilizes and we can figure it out. So I guess that's about it, guys. Like I said, those are two learning lessons that we've learned within the last 3 weeks. Now we're being patient and sitting on the sidelines, and we have nowhere to go until we decide to, until the market decides to go in a particular direction. We are expanding our horizons to spread trading, because this is painful. Slow money is just as bad as, not making any money at all, or losing money. So this is extremely painful, especially if you rely on the stock market to give you money, or to pay your bills. It's extremely painful because you're waiting for that chance to get into the market to get money to pay your bills. However, if you're a spread trader, you can diversify yourself and you can capitalize off of this sideways movement. And this is not just Altria. This is almost every single stock that's on our watch list is moving sideways currently, and it's extremely hard to trade. So it's kind of painful sitting and watching the stock market go sideways. So we're looking to diversify ourselves and looking more so towards spread trading. And like I said, you guys, that's today's lesson. And always remember, if you don't grind, you don't shine.